Hello everyone, welcome to the channel. We saw that the market reacted from the demand which we marked yesterday, and market gave a nice move in the upside. Okay, so it doesn't mean that market will continue moving upside all the way. So what is happening currently? Just understand this: yesterday's closing is currently acting as a supply. Okay, so what does it mean is, if market tends to close tomorrow by opening flat or a small gap down, if we get closures below 25,990 range, then market can go all the way till 25,800 also tomorrow itself. Understand this point very clearly, because if this new higher high is not being formed, then this demand is not working properly. So market will go and search for next possible demand. So next possible demand which we have in this line of price action is, there is one demand here, and there is one demand here, and there is one last demand here. These are the three demands which are still untested by the market with respect to price movement. So if we get closures below 25,990, there are high chances that market can come all the way initially till 25,890. 100 points here we can easily capture. If this 100 points, if market continues to go down, it all depends on the timing of the market. If this range is being reached by 11 o'clock, before 11 o'clock itself, there are high chances market can continue moving in the downside all the way till 750 also. Doesn't mean that it can happen tomorrow itself, but there is a possibility of this happening, because since this is a last level of price action, market can eventually come to this demand and can start moving upside probably in the coming weeks. Okay, so this is for market opening flat or gap down and sustaining below 25,990. If market opens flat or gap up, then it is going to be very nice market for us. Reason why I'm saying is, then in this case market has reacted from a demand and it has created a new higher high, and then there are high chances market can continue pushing upward to the next possible supply. Next possible supply is being somewhere around 26,175 to 180 range. So there are high chances if market closes above 26,060, there are high chances market can go all the way till 26,180. Okay, so I'll just narrow down the range. We'll just draw one parallel channel here. So between this range to this range, it is a no trading zone. If market stays here, don't trade tomorrow, and if market breaks above this, go for call. Breaks below this, go for put. Simple. Okay, and tomorrow is an expiry. Make sure your quantity size is as less as possible if you are trading in current expiry. If you are going to trade in the next expiry, then you can slightly increase your quantity size. Why I am saying this point in every expiry session is, maximum number of losses will happen only in expiry. Understand this. You don't want to be in the losing side of a trade, especially when your quantity size is high. You will go into panic mode, and you will also eventually will lose your mind. So trading requires patience and calm. When the mind is calm and when your trading plan is also clear, you are guaranteed for profits. Nobody can stop you. Discipline is very important in trading. If you're just thinking like market is, if market is just giving a small movement to the upside till here, don't panic thinking like market will go without you. Let it go. Let it not give a retracement tool and just keep going upside. It's fine. For example, in the first 5 minutes itself, market is shooting up like 100 points. What is the point in trading? There is no point in trading, because we are trading in such a way that our risk is very small and our reward is very high. If market has went all the way till 26,150 or 160 in the first 5 minutes itself, how much is your target left out now? Hardly 20 points. And how much are you risking now? More than 100 points. For 20 points target, are you ready to risk 100 points? It doesn't make sense. Same applies in the downside also. So see, today's movement was very perfect way of trading, because our analysis was spot on. If you did not watch yesterday's video, I strongly recommend you to watch yesterday's videos. That will give you confidence on the way I am teaching you SMC concepts. Simple. If there is any other channel which is giving you better understanding, I don't deny there are hundreds of channels out there which are giving very good educational content than me. I'm not saying I'm the perfect guy, but I'm just saying you, if my content is good for you, I would strongly recommend you follow those channels which are educational for you and which gives you proper profit. End of the day, it is your money. Okay, don't fall for this telegram calls, telegram paid services and all that. I would suggest do your own learning. Learn from the market, from experience. Learn how the structure works. Learn where the liquidity points are. If you see here, there is another open demand. Will market respect this demand? No. Why it will not respect? Because when the market has not created a new higher high, how can the market come down and create a new higher high from this demand? It will not. It will go and search for the next possible demand only. So many people will think like, okay, from here market might go up. No, it will not go up. And many people will think once the market comes down below this point, we will enter put. Aram say it will go till this. No, it will not go. There are demands in every level. Every layer there is a support. Demands are nothing but support, and supplies are nothing but resistances according to normal terminology. So keeping the video small, I don't wanted to drag your time explaining about gyan related to discipline, but I'll tell you one thing. Discipline will take you far off distance than what commitment will do. Only discipline and money management and risk management will help you sustain in this market. If you are going to overtrade or if you are going to do heavy quantity sizing, make sure there are chances that there are your capital can be washed out also when it comes to expiry days. I'm not talking negatively, I'm just talking about probability. This is a game of probability. So keeping the video very short, this just draw these two lines in your chart. Below this put, and above this we can try for call. Simple. Don't keep extended targets for tomorrow. Just close your trades here. This itself in an expiry will give you nice profits if you're trading in small lot sizes. I hope this video is educational and I hope you learned a thing or two from this. Please don't forget to like this video if you really liked it, and comment and subscribe the channel for more such educational content. Thank you so much.